Welcome back to Bitcoin signal processing. Today we are walking through the model the same way it is designed. Short-term first, then long-term, then the macro mood. Bitcoin is trading around $62,400, sitting in neutral territory with a bullish lean, and the picture underneath that headline is more interesting than the headline itself. We start with the short term, and we start with stablecoin supply because this is the cleanest read on whether real buying power is coming into the system. Total stablecoin supply is now about $313 billion. On a daily basis, it is essentially flat. On a weekly basis, it is up about 0.1%, and on a monthly basis, it is down 2.3%. That monthly drop is the part that matters. When stablecoin supply contracts month over month, the dry powder that fuels rallies is leaving the system. So, the interpretation on the short-term dry powder gauge is bearish. Buyers are not arriving at the door with new chips. Next, the 14-day RSI. This one tells us whether price action is overcooked or underloved on a 2-week horizon. The current reading is 40.39. That puts us in the lower half of the range, well below the 70 line that signals overbought and above the 30 line that signals oversold. The interpretation here is neutral, leaning slightly cool. There is no euphoria to fade and there is no capitulation to buy. It is a quiet RSI, which usually means price has more room to surprise in either direction. Now, ETF flows. This is institutional behavior in real time. Over the last 7 sessions, the spot Bitcoin ETFs have seen a cumulative net outflow of about $316 million. The most recent day, June 18th, printed a net outflow of about $89 million. IBIT is leading the redemptions, GBTC continues its slow bleed, and only a few funds are taking in capital. The aggregate signal is neutral with a bearish tilt. Institutions are not panicking, but they are also not buying this dip. They are watching. Quick reminder, if this series helps you think more clearly about Bitcoin, subscribe, share it with someone who needs it, and hit the like button. It is the single biggest thing you can do to help this channel grow. Now, back to the model. Now we shift gears. Short-term indicators tell us about the next few weeks. Long-term indicators tell us where we are in the cycle. And here is the key idea behind this model. Long-term indicators are read with a contrarian lens. When they say undervalued, that is when patient capital accumulates. When they say euphoric, that is when patient capital trims. We are not chasing the long term. We are fading it. Let us look at the 4 long-term gauges. First, MVRV, market value over realized value, tells us how much profit the average coin is holding. Today, MVRV is at 1.21. The z-score is 0.34. Historically, cycle tops have printed above 3.7 and cycle bottoms have printed below 1. We're sitting just above the neutral line. The interpretation is neutral with a constructive tilt. From a contrarian standpoint, this is the kind of MVRV reading that comes near the start of long accumulation phases, not near the end of bull markets. Next, the monthly RSI. This is the slowest oscillator in the model and the one most worth respecting. The current reading is 42.77. For context, in the last bull market peaks, the monthly RSI ran above 80. At the deepest bear market lows, it touched the high 30s. So 42 on the monthly RSI is mid-bear territory. The interpretation is neutral, leaning oversold on a multi-month horizon. Read it contrarian, that is closer to a buying zone than a selling zone.
Now the 50 versus 200-day moving averages. Price is about 62,400. The 50-day average sits near 72,000. The 200-day sits near 77,000. Both moving averages are above current price, and the spread is widening. Mechanically, this is a weak bear trend. Trend followers will see this and stay out. But this is exactly the kind of structure that has historically preceded the next cycle leg, because once price reclaims the 50-day, the move tends to be fast. Now the fourth long-term gauge, and the one I weight most heavily, the Bitcoin power law. The model's fair value today is about $141,000. The power law bottom is about $59,000. Today's price of $62,400 sits just above that bottom. We are at minus 56% deviation from fair value with a sigma of minus 1.96. The interpretation is undervalued. Historically, this band has been one of the most reliable accumulation zones in Bitcoin's life. The model has been invalidated 0 times since 2016. Read contrarian. This is the signal that does the most work in the model. Now the macro layer. We start with the crypto fear and greed index. Today it prints 23. That is extreme fear. Historically, prints below 25 have clustered near multi-month lows. Read contrarian. Extreme fear is constructive. The crowd is most pessimistic right when the long-term gauges quietly say undervalued. That alignment is the part worth noticing. Next, oil and geopolitics. Brent crude is trading at $76.65, down about 1.5% on the day and well off its year high of 119. Lower oil reduces inflation pressure and softens the case for restrictive policy. The geopolitical risk premium that pushed crude higher earlier in the cycle is bleeding out. For Bitcoin, that means one less reason for the dollar to stay bid and one less reason for risk assets to stay pinned. And finally, Warsh and monetary policy. Kevin Warsh has been laying out a framework that puts more weight on financial conditions and balance sheet posture than on the funds rate. If that framework continues to gain ground inside the Fed, it raises the odds of a more accommodative liquidity stance into the second half of the year. The DXY is already trading bearish at 101. The macro interpretation is neutral with a softening dollar bias. Soft dollar plus low oil plus extreme fear is a setup the long-term model has historically liked. So where does that leave us? Short-term dry powder is light and flows are soft. Long-term, every single gauge is in the accumulation half of the range, with the power law in outright undervalued territory. Macro is leaning constructive. The contrarian read on the long-term side is the loudest signal in the model right now. Posture, patient accumulation, not chase. For the daily readings and the full model, visit bitcoinsignalprocessing.com. This is educational only, not financial advice. Trade your own plan.